Mr. Rajesh Kothari of AlfAccurate Advisors as well. So Rajesh, that's precisely the first question. What have you been buying of late and what have you exited, if at all anything?
Hey, hi. While I will not able to disclose what we are buying and what we are selling into, but I can tell you what basically we are bullish on in terms of the themes. And for FY24, for next 12 to 18, 24 months, we think three C's are going to do, reasonably well compared to the overall economy. The first C is for capital goods. So we expect that, capex momentum to continue for companies which are under our universe. They have reported about 41% growth in order intake. Probably is the second consecutive year of highest growth in last 12 years. So we are very bullish on their theme, and we are holding many companies, within this space. Second C stands for consumption. We expect the rural demand, which was hit adversely due to the very high inflation. I think that is going to revive as inflation is now moderating, and therefore demand will come back. And third C stands for credit growth, and we believe that credit growth, particularly industrial credit growth as well as retail credit growth, is likely to remain strong for next 2-3 years, and therefore banking and finance is the third favorite sector. So these are the three sectors on which we are bullish on, and accordingly, we are positioned in our portfolio.
Right. But Rajesh, don't you believe that banks are getting a crowded space? And if you really have to, get some alpha in your portfolio, then you really have to diversify from those concentrated names like, an ICICI Bank or an SBI for that matter.
Well, you are right. So, you need to be very selective. It is, it is always a bottom-up, once. So we have a combination of top-down and bottom-up. And so these are the three sectors from top-down perspective. And when it comes to bottom up, if you look at our portfolio, you will realize that we have a really cherry-picked many companies within each sector, whether it is banking or whether it is consumer or whether it is a capital goods. And I think this year belongs to alpha fund managers. So bottom-up strategy will deliver a reasonable alpha for the investors.
Right. Interesting. Just looking at your portfolio right now, and amongst your top 5 holdings, of course, there's Infosys as well in your large cap portfolio. Wanted to understand whether after the recent decline, you've been adding more positions there. What is your view overall on IT?
Well, IT sector, we have reduced the weightage in IT sector exactly, I think, about 14 months back in month of March 2022. Earlier, we used to have a 13-14% IT weight. Most of that we reduced 1 year back and reduced to about 7 to 8%. And from here on, we are incrementally looking at it, but we are not yet, what I would say, we still remain underweight. So that's the one sector which is under watch list, but we are still underweight. We believe that the pain may continue for some more quarters probably. Yes, stock prices have corrected, and therefore we are watching that space, and we may look at to add into it at right time in the right companies.
You might add into IT at the right time in the right names, but what about this entire new age tech vertical, your Zomato, Nykaa, CarTrade, PB FinTech of the world? Have you been buying into any of these names?
Yeah, we are holding one of the name which, so kindly please put a disclaimer because now we are going stock specific. So we are holding one name, PB FinTech, and that is rewarded as reasonably well from our initial purchase cost. And we still remain bullish on that name because it basically meets our investment criteria of 3M investment approach, market size, market share, and margin of safety. So we believe that the company being the almost like oligopoly in the sector with a huge operating leverage in play, and that will result into very strong underlying growth, probably in around a 2 to 3 years time frame. So this is one name which we own. And we like this name within this kind of a new age business.
Okay. Kunal, it's been quite interesting, right? The ride from all the way close to those 40 levels to now we've almost doubled on Zomato.
Yeah, I think we've accelerated the momentum. I think last couple of weeks for Zomato from 60 levels to 74 was the first zone of big breakout for the stock. And then from 74 to now almost nearing that 80 mark for Zomato. So the volumes have inched up pretty much high post that breakout of 70 for Zomato. I think that's the the inflection point for the stock price. And I think that also augurs very well in terms of the price patterns, because that signifies a breakout of the swing resistance for Zomato. So which means that traders who were sitting on the sidelines waiting for the prices to break past above 70, they have started to participate post the breakout above those levels. So that generally encourages the short term as well as the medium term investor to hold on to their positions. And I'm not sure whether we're looking at a possible 3-digit mark for Zomato over the near term, but yeah, I think possibility of this uptrend to continue till at least 85-90 levels could be seen for the stock.
Rajesh, just wanted to come back, and one of the big themes which is playing out right now is energy transition and the kind of impact it will have on various verticals, and auto is right there at the forefront with the entire EV transition. And now you have the latest reports coming in that Tesla is also looking at deepening their presence in India. With respect to the EV transition and auto ancillaries, which are the top bets to play at this point of time in the stock markets?
Well, I think there are two ways to look at it. One is on the OE space. Within OE space, we believe that the current market leaders, be it two-wheeler space, or be it passenger car industry, or be it a commercial vehicle space, we believe that they will continue to remain leaders even the post this transition, because these are the companies, they have a deep moat, whether it is in terms of available cash to reinvest into the future technologies, or it is in terms of the distribution network, and so on and so forth. So we believe that the leadership mode will continue. In auto ancillary space, you really need to be very careful, because there it's going to be clear distinction between winners and losers. There are some companies probably which may not be there after 10 years down the line. When we probably will talk again after 10 years, we'll come to know that probably 30-40% auto ancillary companies, probably they are gone out because of this EV transition. But on the other hand, there will be a basket of companies which will be able to scale up their business 2, 3, 4, 5, 10x from where we are currently. So what we do is that we look at the space where there is an opportunity to increase the content per vehicle significantly, where there is an opportunity that irrespective of whether it is a diesel, or whether it is a petrol, or whether it is a CNG, or whether it is a electric, it is a platform neutral. So there are many components, there are many sectors, for example, wiring harness, for example, rooftop, for example, airbags, for example, seats, for example, cables. There you are not going to see any disruption. So in fact, they are benefiting because of electrification of the vehicle. So we are looking at those companies which are rightly positioned to capitalize on that trends, and they are going to gain huge scale over next 3 to 5 years. So those are the few kind of companies which are into that space. We have been buying into for our portfolio.
Right. Okay, looking at some of the other names right now in trade, BPHP, of course, are ones which are holding out very well. And then, of course, there's Adani Enterprises, Hero MotoCorp, Adani Ports, Bajaj Finance. These are also some of your other winners. But not such a great day for a Kotak Bank, for an HDFC Bank, ITC, Axis, ICICI Bank. Kunal, I think the Nifty Bank is underperforming the benchmark, isn't it?
Yeah, the last couple of days, the Nifty Bank has corrected more sharply. I think it's corrected by more than 600 points as compared to Nifty, which has corrected just about some 150 odd points over the last couple of days. So that itself tells you the underperformance of Bank Nifty. But I think that's also got to do with more of the underperformance from those large cap names. I think ICICI Bank as well as HDFC Bank, they've been big underperformers. But on the other hand, I think Axis Bank has emerged as a good breakout candidate, and it surpassed the previous resistances of 900, 925, where it spent almost a couple of weeks consolidating. So that's a big breakout candidate from the banking pack as such.
Okay, so that's the take coming in on some of the banking names. On that note, Rajesh, we let you go. Thank you so much for joining us today. And in fact, let's take the closing trade picks from our technical experts now. Naresh, what's the closing idea?
So that would be Indus Towers. The stock has been consolidating around that 160 mark for the last 3-4 sessions. A double bottom done at 135. It looks like a breakout move is possible here towards 180 levels in the short term.
What about you, Kunal? What's the closing trade that you are punching in?
I'll go with IDFC First Bank, a stock which has corrected in the last 1 week from I think 73.5 to 71, 72. Could probably make a good comeback. So I think the risk reward is also favorable to go for a long. Would suggest a buy on IDFC First Bank.
Okay. Okay, so IDFC First Bank, it's a trade that Kunal is recommending at this point of time. But on that note, slipping into a very short break. Don't go anywhere. When we come back, we'll track the last 30 minutes of this trading session.